In this video, we will break down 6 chip stocks set to win big from Trump's tech tariff exemption and why this single policy shift could quietly reshape the semiconductor landscape for years to come. You are about to see how a targeted tariff decision is strengthening the most powerful chip makers in the world, reinforcing their pricing power, widening their competitive moats, and accelerating long-term earnings potential at a time when global tech demand remains relentless. These companies sit at the core of modern computing, mobile technology, artificial intelligence, and global supply chains. They operate at massive scale, dominate critical layers of the semiconductor ecosystem, and benefit from structural advantages that compound over time. These are not speculative trades chasing headlines. These are foundational businesses designed to grow stronger as technology becomes more central to the global economy. Hit the like button, share the video, and leave your thoughts in the comments. Subscribe to the channel so you don't miss out on the next important financial investing update. Tariffs matter because semiconductors are not optional components. They are essential inputs into smartphones, data centers, vehicles, industrial systems, and national infrastructure. When tariffs are lifted or exemptions are granted, the beneficiaries are not just manufacturers, but the entire ecosystem built around advanced chip design, fabrication, and integration. Cost structures improve, margins stabilize, and long-term planning becomes more predictable. The first company positioned to benefit meaningfully is Qualcomm, ticker symbol QCOM. Qualcomm matters because it controls one of the most important intellectual property portfolios in modern technology. The company sits at the center of wireless communication standards that power billions of connected devices globally. Its chips and licensing model are embedded into smartphones, connected vehicles, industrial devices, and emerging edge computing applications. Qualcomm's moat is built on standards leadership and patent dominance. Every major wireless device relies on technologies that Qualcomm helped invent. This creates a recurring royalty stream that is largely independent of individual product cycles. That structure gives Qualcomm resilience during downturns and leverage during upcycles. The tariff exemption is particularly important for Qualcomm because its business model depends on global manufacturing partners and international supply chains. Reduced trade friction lowers costs for device makers, supports higher unit volumes, and protects Qualcomm's royalty base. As smartphone demand stabilizes and premium devices rebound, Qualcomm benefits on both the chip sales and licensing sides of the business. From a growth perspective, Qualcomm is no longer just a smartphone story. The company is expanding aggressively into automotive platforms, connected computing, and industrial Internet of Things. Its automotive design win pipeline has grown substantially, reflecting long product cycles and sticky customer relationships. These segments are less cyclical and provide long-duration revenue visibility. Financially, Qualcomm maintains strong free cash flow generation and a disciplined capital return strategy. Management has consistently balanced investment in innovation with shareholder returns, reinforcing confidence in the long-term model. In an environment where tariffs can distort pricing and margins, Qualcomm's diversified revenue streams offer insulation. Qualcomm is not winning because of hype. It is winning because it owns the standards that define how the world connects. Tariff relief simply strengthens an already durable foundation. This video is brought to you by Value Stocks Investing Master Course. If you're looking to grow your wealth by investing in solid, undervalued stocks, but not sure where to start, I created the Value Stocks Investing Master Course to teach you how to identify great companies, make smart investment decisions, and build a portfolio that lasts. Click the link in the description and pinned comments to get the course today and take control of your financial future. The second company positioned to benefit is Apple, ticker symbol AAPL. Apple matters because it is not just a hardware company. It is a global consumer technology platform with unmatched pricing power, brand loyalty, and ecosystem integration. Semiconductors are critical to Apple's ability to differentiate its products, control performance, and optimize energy efficiency across its devices. Apple designs its own chips, but relies on complex global manufacturing networks to bring those chips to market at scale. Tariff exemptions reduce cost pressure across the supply chain, protect gross margins, and give Apple more flexibility in pricing and product strategy. Apple's moat is ecosystem lock-in. Hardware, software, and services are deeply integrated, creating high switching costs for users. This allows Apple to absorb supply chain volatility better than most competitors. When tariff pressure eases, Apple does not simply pocket the savings. It reinvests into innovation, marketing, and ecosystem expansion. Long-term growth for Apple is driven by installed base monetization and services expansion. As device performance improves through advanced chips, users stay longer, upgrade more often, and spend more within the ecosystem. Chip efficiency improvements also enable entirely new product categories and use cases. Financially, Apple remains one of the strongest cash-generating businesses in the world. Its balance sheet strength allows it to navigate geopolitical shifts with minimal disruption. Tariff exemptions enhance predictability, which markets reward with valuation stability. Apple is not dependent on tariff relief to succeed, but it benefits significantly when global trade friction is reduced. That combination of resilience and optional upside makes it a clear winner. The third company is Advanced Micro Devices, ticker symbol AMD. AMD matters because it represents one of the most successful long-term competitive turnarounds in semiconductor history. The company has re-established itself as a leader in high-performance computing, data center processors, and advanced graphics, directly competing at the highest levels of the industry. AMD's moat is built on execution and architectural leadership. Its chip designs deliver strong performance per dollar and energy efficiency, which is critical for data centers and enterprise customers. These customers are highly sensitive to cost structures, making tariff relief especially impactful. Reduced tariff pressure lowers input costs, improves supply chain efficiency, and supports demand from hyperscale and enterprise buyers. As AI workloads expand and data center investment continues, AMD's processors remain central to infrastructure build-outs. AMD's growth drivers include expanding data center share, accelerating adoption of AI-optimized processors, and continued strength in high-end computing. These are long-cycle markets where customer relationships compound over time. Financially, AMD has strengthened its balance sheet, expanded margins, and improved revenue visibility. Management has demonstrated disciplined execution, focusing on profitable growth rather than volume at any cost. Tariff exemptions reinforce this trajectory by stabilizing pricing and procurement. AMD is no longer a challenger fighting for survival. It is a scaled competitor with durable relevance in markets that matter most over the next decade. The fourth company positioned to win meaningfully from Trump's tech tariff exemption is Broadcom, ticker symbol AVGO. Broadcom matters because it is one of the most strategically diversified semiconductor companies in the world. It operates at the intersection of connectivity, networking, broadband, and enterprise infrastructure, supplying critical components that power data centers, cloud computing, and high-speed communication networks. Broadcom's moat is built on scale, specialization, and customer entrenchment. Many of its products are deeply embedded into customer systems and are not easily replaced without significant redesign costs. This creates long-term contracts, predictable revenue streams, and strong pricing power. When tariffs are reduced or exemptions are applied, Broadcom benefits disproportionately because its products are often mission-critical rather than discretionary. The tariff exemption is especially relevant for Broadcom's infrastructure-focused chips that move across complex global supply chains. Reduced trade friction lowers costs for customers building large-scale data centers and enterprise networks. This supports continued capital spending, which directly feeds Broadcom's revenue growth. Broadcom also benefits from its software segment, which complements its hardware offerings by increasing customer stickiness. This hybrid model creates a flywheel where hardware adoption drives software revenue and vice versa. Few semiconductor companies have successfully executed this strategy at Broadcom's scale. Financially, Broadcom is known for strong free cash flow generation and disciplined capital allocation. The company prioritizes high-margin businesses and has a long track record of returning capital to shareholders while still investing heavily in research and development. Tariff stability improves visibility into future margins, which is critical for long-term planning. Broadcom is not a momentum story, it is an infrastructure compounder. Tariff exemptions simply remove friction from a business already positioned at the core of global digital expansion. The fifth company on the list is Taiwan Semiconductor Manufacturing, ticker symbol TSM. Taiwan semiconductor manufacturing matters because it is the backbone of the global semiconductor industry. It is the world's most advanced contract chip manufacturer, producing the most sophisticated chips used by leading technology companies across smartphones, data centers, and artificial intelligence. TSM's moat is unmatched manufacturing expertise and scale. Advanced chip fabrication requires billions of dollars in capital investment, decades of process refinement, and deep technical know-how. These barriers are so high that only a handful of companies globally can compete, and none operate at TSM's breadth or efficiency. Tariff exemptions are critically important for TSM because its business model depends on global trade flows. Its customers rely on seamless cross-border movement of components, equipment, and finished chips. Reduced tariffs lower costs, improve lead times, and increase supply chain reliability. This benefits both TSM and its customers. TSM's growth drivers are tied to the relentless demand for more powerful and more efficient chips. Artificial intelligence, high-performance computing, and advanced mobile devices all require cutting-edge manufacturing processes. TSM continues to lead in next-generation nodes, reinforcing its technological advantage. Financially, TSM generates strong cash flows, but reinvests heavily to maintain leadership. This reinvestment is not optional. It is the price of staying ahead. Tariff stability supports long-term capital planning, allowing TSM to commit to multi-year expansion projects with greater confidence. TSM is not exposed to consumer cycles in the same way device makers are. It benefits from the collective demand of the entire technology ecosystem. Tariff exemptions enhance that ecosystem by reducing cost pressure across the board. The sixth and final company is Nvidia, ticker symbol NVDA. Nvidia matters because it sits at the center of the artificial intelligence revolution. Its chips power the training and deployment of advanced AI models, high-performance computing workloads, and data center acceleration. Nvidia is not just a chip company. It is a platform that defines how modern computing scales. Nvidia's moat is built on a combination of hardware leadership and software dominance. Its ecosystem is deeply embedded into AI development workflows, creating high switching costs and strong customer loyalty. This gives Nvidia exceptional pricing power and margin resilience. Tariff exemptions are particularly impactful for Nvidia because its customers operate globally and deploy infrastructure at massive scale. Lower trade barriers reduce total system costs, encourage faster deployment, and support sustained demand for accelerated computing. Nvidia's growth drivers extend beyond AI training into inference, autonomous systems, and enterprise adoption of AI tools. These markets are still in early stages, suggesting long runway for expansion. Nvidia continues to invest aggressively to maintain its lead, reinforcing its long-term relevance. Financially, Nvidia generates exceptional cash flow and reinvests heavily into research and ecosystem development. Its balance sheet strength allows it to navigate policy shifts while continuing to innovate at pace. Nvidia does not rely on tariffs to drive demand. Demand already exists. Tariff relief simply amplifies the pace at which customers can scale. When you step back and look at these six companies together, a clear pattern emerges. Each one occupies a critical position in the semiconductor value chain. Each one benefits from reduced trade friction, and each one has built durable advantages that allow it to compound value over time. If you want exclusive stock tips, in-depth analysis, real-time trade alerts, and free investing guides, join the StocksGalore Patreon today and take your investing game to the next level. Our members there get full in-depth analysis on most of these stocks I mention here. Head over to patreon.com/StocksGalore and become part of our growing community of smart investors. Link is in the description. Now I want to hear from you. Of these six chip stocks, which one do you believe has the strongest long-term competitive advantage in a world of accelerating AI and global technology demand, and why? Share your thoughts in the comments. Do not forget to like the video, share your thoughts in the comments, and subscribe so you do not miss the next important investing update. Thanks for watching, and I will see you in the next one.